Hey everybody, today let's talk Costco stock. So Costco is one of the top retailers in the world and it reports earnings on December 14th. So it's coming up soon and I thought it'd be a good time to assess whether now's a good time to buy the stock before it reports earnings. So let's first start with how it's been doing this year. So year to date, it's up 33%, much better than the S&P, which is around 18-19%. So overall, it's been a strong year for the stock. But one way you can gauge what direction the business is going or how well it's doing is every month Costco releases monthly sales numbers. So here it's got comparable sales for the period ending November 26th. As you can see, US was 1.8%, Canada 4.4%, other international markets 11.7%. The total company was 3.5%, e-commerce was 9.9%. So comparable sales is not the same as net sales, which is everything. Comparable sales just looks at the stores that were open 12 months before. So basically, we're not factoring in the impact of store closures or new store openings. So that's why going off this won't tell you exactly what the revenue will look like, just because it's strictly it's comparing apples to apples, the same stores that were open a year ago. How much they're growing at right now. So in the U.S., the growth rate is the slowest at 1.8% versus the other segments and markets. If we look at October, same sort of pattern: 1.1% for the U.S., 8.5% Canada, 8.2% international, and around 3% for the total company. If we go back to September, U.S. was a bit higher at 3.2%, Canada 6.7%, international again double digits, so pretty strong. So as you can see, it's still been growing, but overall, we're talking about 4.5%, 3%, 3.5% for the total company. That's what their comparable sales are growing at. And if we look at its valuation, Costco's trading about 40 times its earnings. And normally, if you're paying that high of a multiple, you'd expect a bit better of a growth rate from the company. So that's the one part that right off the bat is a little bit concerning, because this is not a cheap stock to own. Price to book at almost 11. So I mean, you're paying a pretty significant premium for the stock right now. It's been already up 33%. It's been doing really well, and so it can look a bit expensive. Now, one thing I'm going to also look at is how it's historically done on earnings day. So I have this Google Sheets file that I've created, and basically it's tracking the earnings surprise, revenue surprise, how it did on the day after reporting its earnings results, how it's done the 5 days after, and 20 days after as well. So basically a month after. And so these earnings surprise and revenue surprise, they're based on data from Zacks.com. So other estimates might be different, but basically this is generally what it looks like. So normally it's a pretty good bet to beat on earnings. Just once in the past few years that it's actually missed on earnings. Revenue, it's missed more often, but overall this isn't a terribly volatile stock here. As you can see, 1%, 4%, -2%, 0%. So this is not a stock that you're likely going to see with a big swing on earnings day, unless something drastic happens. This is not going to be one for traders who are going to be betting on big swings in Costco's stock on earnings day. Over a 5-day period, a bit more volatility, but generally still we're not seeing anything in double digits over the past couple of years in either direction. So it's fairly stable. When you're looking at a 20-day return over the past month, it's actually pretty positive. It's only down 0.2% here, 0.5%, 0.5% here, 4.6% here. So overall, it's been fairly rare that the stock has been down big over the 20 days after earnings. So even if there is any sort of volatility, it seems to taper off after a month or so. And here I've also got a list, a breakdown of how it's done over month by month. So if you look at December's typically not a strong month for the company, for the stock, just because it's been down by double digits multiple times. It's a bit more green in November, and in other months. So December's not a terribly good, been a terribly good time for the stock. And when you factor in the fact that its growth rate has been slowing down a little bit, it's trading at a high multiple. There's a potential here for Costco's stock to see a bit of a more of a decline, just because it seems like its business is slowing down a little bit. And for it to continue to go up would mean that it's probably going to be trading at an even higher premium than 43 times trailing earnings. And so that's a bit of a high price tag already. So even though Costco has a solid business, it doesn't look like a slam dunk buy heading into earnings. It's stable if you're planning to hold it for 5-10 years, however long. But as far as trading it on earnings day, it's not a stock that's probably going to result in huge gains for you, and especially with its high valuation, typically not doing well in December, and comparable sales numbers that aren't nearly as strong as they were a few years ago. I think it's more likely than not that it goes into it goes down when it releases earnings, but not by much anyways. But next year in 2024, I think it could go down a bit more and have a bit of an off year, just because it's been gaining so much this year, and the business does appear to be slowing down. Discretionary spending seems to be slowing down for other retail companies as well. So I don't think Costco is going to be able to stay at 40 times earnings for much longer. So I think it's getting a bit riskier at a higher valuation. So if you're looking to trade the stock on earnings day, I would suggest not, just because it's more likely than not that it's probably going to go down in not just on earnings day, but in the weeks ahead and the months ahead, because of its high valuation, and just simply not doing well enough that we can justify its high price tag. So although it's a good buy for the long term, I wouldn't count on any big movement on earnings day.